This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more. Welcome back to 30 Deals in 30 Days. We are on day 3, and today we're going to be diving into a deal in California. Interestingly enough, Christian Rooney sent this one in. He joined the challenge and submitted this deal, and I think it's pretty interesting because, I've had a lot of people tell me California is not investable. It's too expensive. It's too difficult to find deals in California. And so I'm excited to dive into this. I have, other than glance at what the email says that he sent me, I haven't dug into this too deep. So you guys are going to learn with me. Is California investable or not? I don't know. We'll find out today. Watch Me Grow is saying, is this pre-recorded? No, we do these live. I mean, if you catch the recording, then yeah, I would say, yeah, that's pre-recorded. But right now, if you're joining me at 12:16 p.m. Central Standard Time on Saturday, October 25th, we're live. All right. Okay, let's dive into this deal. Let's check it out and see what we're going to be diving into. By the way, if you want access to the underwriting tools that I'm going to be using today, including AI tools that I won't be using today, but I might be using tomorrow, so tune in to see how that works. If you are interested in getting a better idea of when I'm actually going live so you can make sure that you're not missing it, or if you want to submit deals just like Christian did, join the challenge. It is free to do. The link is in the description below, crecentral.com/30deals30days, all one word with the numbers, 30 deals, 30 days. And you can submit deals, and maybe I'll look at a deal that you actually want to buy in your neighborhood. All right, so Christian sent this deal, and he says, Tyler, I have a great project for one of your 30 and 30 podcasts. Let me know if you're interested. Here it is. Value add, older buildings, 2 residential not rented, and just finished. Too many tenants. Interesting. I wonder what that means. Multiple utilities shared on smaller suites. Big question is, after value is added, will the market for a building with so many tenants ever get a reasonable cap upon exit? That's a great question. If you have a bunch of smaller tenants, you'll probably get penalized on the cap rate, but it depends on who you're trying to exit to. There's also short-term leases, so maybe hard to find, or maybe hard to get market rate financing in the future unless everyone is on a 3+ year. That's true. Most lenders like to see a little bit of stability. However, you can actually prove to them as to why they shouldn't have stability. I did that with the Wash because we only wanted 1-year leases, and I put together a compelling enough case for that. The biggest thing there was just telling them, look, this is kind of an unproven model. We don't want to undercut ourselves and under rent what this could possibly be just because you want a 5-year lease. Thank goodness I did not cave to the bank's pressure when they first said that, because we initially rented them for $32.50 a month, and I think they're at $42.50 a month now. It's been, 3 years? So we went up 30% in 3 years. I don't think that you're going to get 10% every single year on a 5-year lease. It just typically doesn't happen. All right, see current debt rate quotes. I think the property went into escrow at $3.4 to $3.5 million with seller financing with $1.5 million down. I was at $3.2 million back of napkin, but want to be ready if it falls through. All right, let's see. Some comments from you guys. Jam is saying, great to be back. Jam, great to have you. Thanks for coming back. Watch Me Grow is saying, awesome. Thanks for doing this, Tyler. Appreciate you. I appreciate you, Watch Me. Thanks for showing up. These are always fun. It makes it more fun when you guys jump in and provide your commentary. So I want to hear from you guys as we're doing this. What do you like about this deal? What do you not like about it? Ironwood, you've been like every single one of these. Good to see Ironwood saying, let's go. Massive value in the challenge, Tyler. Absolutely glad you guys are enjoying it. Robert, good to see you again. We dove into Robert's deal yesterday, which was pretty fun. Kalamazoo, wouldn't invest there. And then Black Sheep, the advice you gave me the other day was 100% correct. You may have gained another coaching student. Let's go. Hey, happy to help however I can. That's what we're here for. When I was first getting started in commercial real estate, we just didn't have a lot of resources. There was nothing like this out there. And I just think through man, if there was somebody I could have watched on YouTube and learned from as I was going through this process, how much faster could I have gotten all this going? That's what I'm doing for you guys. So, all right, let's dive into this deal. It's 117 West Main Street. This is an offering memorandum from Marcus and Millichap. All right. It's a pretty big property. So it looks like, strip center. It's kind of interesting. They've got like a little building and as an island in the middle. You don't typically see that. Looks like we're on a pretty big thoroughfare here. I like that. I'm not sure. This side street looks like it could be pretty big too, but it's got half the traffic as this main street here. Okay. We're looking at retail, so traffic counts do matter. All right. Those retail tenants, they want to see the visibility. They want to know that there's people actually driving by here that they could hopefully lure in, right, to buy their wares. Sorry, guys, I'm going to have to drink a lot of water today. I have been talking all morning. We've got the in-person mastermind going on here, and I've been running sessions on how to structure deals if you're raising capital. Okay, offering summary. I mean, right off the bat, cap rate's not bad. But, I mean, if we're talking $3.3 to $3.4 million under contract before and they're asking 3.8, that to me says, okay, they know it's not worth 3.8. I wonder why they have it listed at that, though. 7.02% cap rate, $123 a square foot. Not a bad price per square foot. Not bad. Like, that's within the range of interesting to me. We'll put it that way. NOI is $266,000 a year. Pro-forma cap rate, 9.7. Don't those brokers just love to be so optimistic? Here's the thing, Mr. Broker. If your seller could get a pro-forma cap rate 9.7% today and therefore get a substantial amount more value out of this sale, why aren't they doing it? What's happening? Why all the BS? And that's not necessarily a bad thing. I mean, look, there's always different situations as to why a seller may not be willing or able to go and push the value on their property. Maybe it's going to take $1 million. I haven't seen their pro forma yet. Maybe it's going to take $1 million of renovations on this property to be able to raise those rents, and the seller just doesn't want to do that. Sometimes they like to leave some meat on the bone for the next guy, and that's totally fine. It's about 31,000 square feet. Looks like it's got 30 tenants. Wow. Wow, you weren't kidding, Christian. 31,000 square feet with 30 tenants. Your average tenant is about 1,000 square feet. That's pretty wild. Not a terrible thing. It's just interesting. Very interesting. Definitely not worth a 7% cap rate unless you've got like Starbucks corporate needed 1,000 square feet at this location for some reason. So yeah, I could see what he's saying with the, valuation closer to 3.2. Let's look at, so Christian said when he underwrote it, he got to 3.2 million. So 3.2 divided by, actually, let's do this. 266,000 NOI divided by 3.2 million gives us an 8.3% cap rate. But that, to me, seems like a much better number. I think it's definitely worth north of an 8% cap rate. With the amount of tenants, the amount of work that's going to be going into this size, I doubt there's going to be a lot of larger corporate tenants. Probably going to be a lot of local and regional groups. You heard it here first. That's my assumption. Let's see if it's remotely correct. I'm going to zoom in on this so you guys can see it a little bit better. There we go. All righty then. Well, the first vacancy is not good. We've got 1,869 square feet vacant. So it looks like the bigger suite, vacant right off the bat. We don't like that. Let's see. Ronan is saying, yo, what up, Ronan? Thanks for joining us. Watch me. Is there an anchor tenant? I don't know. Is there? Looks like 2,400 square feet. Oh my gosh, the biggest is 2,400 square feet. Manager's use. So that probably means that they are letting their manager, like their property management company, use that? Assumed to be leased at $1.50. What does that even mean? Assumed to be leased at $1.50 gross? Oh, this is just an assumption of what so the largest space in the property is being used by the manager. They are not paying for it. And in this pro forma, they're saying you could lease it for $1.50 a square foot per month, which is about what, $18 a year? So yeah, not great. Watch me grow. What is the occupancy? It looks to me like we've got 1 vacant, 2 vacant. So, I mean, let's run the math on this. Maybe they tell us later on, but I'm just going to 1,869 square feet vacant plus manager's use, 2,394 vacant plus, you know what? Actually, I'm just going to add up the percentages. So 6.1 plus 7.8. So right off the bat, we're already 14% vacant. Treasure Hut, why don't they have a lease date? So that's concerning. Probably month to month is what that means. Why do they have... So, okay, this is kind of a red flag to me. Look at this. They have, farm labor CTR, Thai massage, game shop. These don't seem like official names to me of these actual businesses, which is kind of weird. And then you'll have like what seems like an official name. So like when you say accounting, is that an accounting firm or is that the seller's accounting team that occupies that space? When you see there was one that's insurance, is that an insurance company or is that, I would assume it's insurance company. They're paying. I just find that odd. Who knows what it is? Who knows what it means? But it just seems very weird. Okay, let's keep going. Looks like we've got another one vacant, 1.3%. So 15.2. Okay, it looks to be about 15.2%. Oh man, I forgot. It just keeps going. Oh, it just keeps going. 1.6 plus we got another vacancy of 2.5. Ooh, plus 1.6 plus 1.8. Oh man, we're already at 22.7% vacancy. Unoccupied tenants 9. Unoccupied rentable square feet, they have 28.5%. Did I miss something? Oh, I missed these apartment Fs. Oh, that's weird. There's apartments in this? That would make sense. That brings you up to 28.5% unoccupied. But what are the apartments? It says apartment F and apartment R. 2 bed, 2 bath. I can tell you right off the bat, if you've got 2 apartments mixed in with this retail center, obviously it's going to be vacant. That's wild. Oh, black sheep. After my own heart. Quote, we pay on performance, not potential, end quote, Tyler Cauble. That is exactly right. We do not pay tomorrow's price today. Let's see. Watch Me Grow is saying, I love the building in the middle, unique building layout. I know, it's you've got an island. Like, what's up with that? I don't typically see that design. Watch Me Grow. Would you say the building layout is efficient? It looks like you might not be able to get a stabilized loan for this. May need a bridge. Would an SBA loan work in this situation? Very interesting. I think that you could certainly get a loan for this. I think it's going to be tricky, and it's going to come down to the guarantor's balance sheet. This is just a very odd deal. Let me see if I can figure something out about this apartment, because that's kind of weird. Yeah, of course, in our pro-forma, we have general vacancy getting down to 10%. Come on. If you could do that already, why haven't you? They haven't painted me a compelling picture as to why. All right, here we go. Let's look at some pictures of this. I'm guessing that these are the apartments. That is very odd. Although, hey, if you need your first commercial real estate deal and you're willing to house hack, come on. Live on site, get a free apartment. You can manage the property yourself. You could lease it yourself. You might actually be able to make your entire living off of this one property. It wouldn't be too bad. Although, we're not getting in this to give ourselves another job. Overall, it looks like it's in a pretty interesting area. I mean, it looks like it's pretty close to a major intersection, and there's a lot going on. .3 acres. I don't like the apartments, though. I just really don't. I mean, maybe they used to be offices and they converted them. I don't know. Plat map. Okay, fine. Nothing really coming to mind. Okay, demographics, semi-important for what we're talking about today, but not super important. I think you guys will start to learn over the 30 days that we're going to be doing all this underwriting that the demographics to me aren't nearly as important as everything else. I think that if we're talking about where we're going to go buy a piece of dirt to put target, that's going to really matter. But for the type of investment that most of us are doing here, right, which is going and finding something that's already in an existing area, renovating it probably so you can create some value and then leasing it, demographics are important. Like, obviously, you don't want to buy in an area where just nobody will ever lease that business from you, but you can kind of tell that, right? Like, when you're looking at a property and you're studying an area and you're going around on Google Maps or you're actually driving it, walking yourself, I mean, if you wouldn't live in that area, it's probably not somewhere that you should invest, right? That's kind of how I look at that. Okay. Yeah. All right. More demographic stuff. Cool. Major employers. That's nice that they include that. Exclusively listed by. All righty then. They don't tell us anything about the apartments. I hate those. So I'm not even going to include that in my underwriting. I am going to think about it. Like, we don't get into commercial real estate to become apartment investors. And if you are going to lease out 2 residential units, you are going to deal with, an absolute nightmare dealing with these tenants. I mean, think about it. The kind of tenant that's going to want to lease an apartment over a shopping center with 29 other spaces, probably not the kind of tenant that you want. All right. So right off the bat, I am going to lop off. Let me go back up here. The 6% for those apartments? That is not usable space to me at all. So yeah, 2.6. Yeah, I mean, we're just going to call it 5.9%. So the best that I think that I could ever achieve on this property is a 94% occupancy. 94%. So it is good to see in their pro-forma that they are going for 10% general vacancy. Maybe they're thinking that those units will be vacant for a while. But what I'm going to do, since I like to underwrite around 7% vacancy on newer deals, I don't exactly know what vacancy is in this market. And again, that is one of those things that I'd be calling brokers. I'd be looking at other offering memorandums. I'd be calling property managers to dig into and really nail that down. But for now, I'm going to assume 7% vacancy. So that means right off the bat, we have 6% because that's just totally unusable space. And then I'm assuming 7% on top of that. So we're talking about 87% occupancy being the maximum that I would feel comfortable achieving. All right, Kevin is saying, do you think it is a copy and paste error? I don't think so. I mean, I guess it could be. He's talking about the like accounting versus insurance and whatever. I mean, it could just be somebody that's lazily putting together a rent roll. If that is the case, though, I have a problem with that because you could just very easily export these out of your property management software. So does that mean that they don't have a very good books for their property management? I don't know. That's a concern, especially when you got this many tenants. Ironwood is saying, is this a commune? Ironwood, if this is a commune, it is not a commune that I would want to be anywhere near. That's for sure. Who knows? But I mean, hey, the thing is, like, this could be a really, really cool property. Like, I know we're kind of making fun of it because it's really interesting, but you guys know I love small business. So to me, right off the bat, like a community like this where you could create a small bit, like that's one thing that seems to be missing from this. They haven't created the community around small business ownership, right? So you could even brand this as the entrepreneurial hub of Woodland. You could go for some sort of community gathering space or engagement. With the space that the manager is currently occupying, could that become a little event space where you could throw entrepreneurial events and, create an entrepreneur center for the area? I think that could be interesting. That could be a massive value add, right? Watch Me is saying, with this high vacancy, some good value add. You have to look at the location and the surrounding areas to see what the area vacancy is. Is it normal for these many vacancies? Yeah, I don't know. We'll pull up some other properties and we'll dig into that for sure. Black Sheep is saying we're not getting into this to give ourselves another job. That's right. Yeah, happy to do it. I mean, that's exactly it. We're not here to work harder. We're here to work smarter. Maybe it could be all converted to medical. Could be. That could be very interesting. Probably very expensive, though. And at that point, it's like, man, you might as well just tear the whole damn thing down and just build a brand new medical facility if that's what you wanted to do. All right. Black Sheep is saying put the management office in the residential areas or convert to commercial/dental offices. Nice. Just thought the same thing, Josh. Convert to residential. Yeah, I completely agree. Those apartments will have to become something else. The problem is, if they're built out as apartments, you're probably gonna have to put some decent money into it. And if you're going to open it, like, they're probably not up to commercial code, right? What's the ADA accessibility for an apartment on a second floor? If it's going to be open to the public, now we're talking about having to add in a lift or an elevator or some sort of ADA accessible access. It's California. It's one of the most litigious states in the union in terms of ADA. So you don't want to mess with that. So to me, it's like, it's almost probably, I mean, it's definitely not worth it if we have to put an elevator in. I'll tell you that right off the bat. Way too expensive. Way too expensive. All right, let's look at what's going on in the area. So 117 West Main Street. I mean, seems pretty decent. I like it. Not too far from the Sacramento airport. That's good. Not too far from Sacramento. So it looks like this is just a little suburb of Sacramento. I wonder what is driving business out here. Because if you're leaving Sacramento, it doesn't look like there's any big cities out this way. So it's not like there's going to be a lot of traffic necessarily going through here to go somewhere else. So maybe it's just a suburb of Sacramento, right? Looks like the hospital is several blocks away. Not a bad thing if we wanted to start looking at some medical office, right? Let's switch this over. Ooh, got a whole bunch of farmland over here, right? Not the worst thing in the world, right? But we know that there's not as much population around this as we would ideally like to see. However, this is pretty dense, right? Looks like there's a middle school around the corner, major street here. In Shape Fitness, looks like there's a big shopping center there. So, I mean, we're in a pretty good commercial district. I like that. Trading saying, no, I'm 21 minutes late. You'll have to join the challenge and get access to when we go live. So trading, you're saying, where can I send you deals to review? Join the challenge and download the app. Like, once you download the app, there's a chat in there. So people are dropping in questions about their deals and I'm responding to them. And if you drop a deal in that chat, I will pull it up and go live here. So that's how Christian sent me this deal to review. All right, let's get Google Street View going here. Let's see what we've got going on. This is the wrong side of the block. Oh, that doesn't look good. You just got a totally vacant lot right there. Looks nice. Looks like that's been, well kept. I'm just looking at the neighbors right now. Church. Looks like maybe it was a warehouse that was converted into a church. Well, apartment complex. Looks like that's been, somewhat renovated. Syndicator special. Wiener Schnitzel. I didn't know that was actually like a thing. Man, all right. It looks like a fast food restaurant, but maybe it's just a one-off. All right, you can tell this is a much, much bigger road. You got another shopping center across the street. Looks a little old and tired. Let's see. This other shopping center also looks old and tired. I wonder why nobody's investing any money out here. Everything in this area kind of looks old and tired. Not that like you need to go into an area and see a whole bunch of new renovation or, like tall and skinnies, but like I would at least like to see somebody investing some money around us and keeping these buildings beautiful or trying to attract stuff. And it just looks like, that's even boarded up. Maybe it's under construction. I don't know. But it just looks like people are kind of letting things stay tired. It makes me wonder, like, is this a growing area? Maybe it's not. Maybe it's not at all. Black Sheep is saying it's crazy I see this stuff so easy because I'm in Cali GC. People are scared of medical conversions, but I bid them and do them. Great profit margins. Oh, 100%. Yeah, I completely agree. They can be very expensive. But guess what? Doctors also pay a lot of money in rent. So, it works out. All right, we're back to the intersection. We're looking the other way. Come on. If the nicest building in your area is a Carl's Jr., we're not doing it right. Modern. Modern nail looks very modern. Nails and Spa to me. Very modern. Alrighty then. Okay. Well, I've got a pretty good idea about what's going on in the area now. The area's interesting. It's not unexciting to me. But, I just wonder why nobody is investing in these shopping centers and making them look even slightly nicer than they would be. All right, let's go to Crexy. And let's start looking at what's going on in the market. Yeah, Watch Me is saying, is population growing or dropping? What's the crime rating in the area? We're going to take a look at that on Crexy right now because I am wondering the exact same thing. So we're going to go into retail for sale in Woodland, California. Oh, not a lot. Not a lot available. Okay. Oh, there's our property. You know what? Let's pull this up. Well, they already sent me the OM, but let's pull up the listing. I want to look at this. Trading, if you just submitted your email for the download link, I would just give it a minute. If you haven't gotten it, I would just say check your spam just in case. Because I've got it set up. It automatically sends it out. We've got 70 people in the group already. All right, let's see here. Is there anything that I'm going to learn from this listing that I didn't get from anything else? Probably not. Okay, let's go look at the other properties and see what we got going on here. This one is about the same price. It's $1 million more. $25,000 square feet, and it's $1 million more. Cap rate is 7.44%. Looks like this one might have already been value added. The Pro-forma is about $100,000 more. The price per square foot is $60 more. And they've got a legitimate flyer. The design doesn't look great right off the bat, but, whatever. At least they've got a legitimate one. Remember yesterday, if you guys were joining us live, we were looking at one that it was just the Crexy generated flyer because the brokers didn't even have one. Crazy. 100% triple net leased, multi-tenant retail, $362,000 NOI with a higher cap rate offered at $4.8 million. Okay. See, smaller lot, smaller building, fair. 92 spaces, 15,000 vehicles per day. So it's in a more high traffic area than what we're looking at. It looks like it might actually be on the major thoroughfare, and this property that we're looking at is just off of it. So, yeah, it is. I mean, not a chance that the property we're looking at is going to compete with this. I mean, if they're going for a 7.44 for this, that's what. Yeah, I mean, Christian, I think you're right on the money with it being well over 8% cap rate on that deal. Recent improvements: exterior and roof upgrades completed in the past 2 years. Tenant-specific interior refreshes, including ADA accessibility enhancements and lighting modernization. New painting of parking lot, landscaping and perimeter signage improvements along California Street. Okay, so basically, this shopping center has already done all of the value add that we would do on ours, and they're able to get to a 7.44% cap rate. So we need to have enough of a spread baked in there to where when we exit at a 7.44% cap rate, that the deal works. Now, that's not to say that when we leave, a 7.44 is going to be the number or not. We don't know. But we don't know if this is actually going to sell for a 7.44. It could get into a bidding war and go down to a 7. It could also end up trading at a 7.75. I don't know. Because it's not a true set comp. All right. But this is not a good offering for the deal that we're looking at. All right. Trading for Science is saying, do I need to schedule a call to join your group? No, if you're just talking about the 30 deals in 30 days, you can go and join that anytime. You don't need to schedule a call with us. If you're talking about joining the mastermind, yes, you'd have to schedule a call. Is it full triple net? That's what it looks like. This comp that we're looking at seems to be full triple net to me. Christian is actually in the chat. What's going on, man? Too many small tenants. We blow replacement cost and fill up the residential easily, adding $45K per month and increase occupancy 10%. All right. That was the Pro-forma NOI. That's true. Yeah. Watch Me is saying the $266,000. Was that the Pro-forma NOI or was that the in place? Let's go back and look at it. Oh, where are we? Rent, Pro-forma rent per year. Oh, they don't even have the actual rent. It's all Pro-forma. We don't like that. I mean, we can look at this total rent per year right here. Okay. Coming down to it, $466,000. So it's actually almost $200,000 less than the Pro-forma. And they're saying, so basically this thing's making like 40 to 60 grand a year, right? That's what they're saying. Current though, they're saying, okay, so the 266 is current. They're saying their Pro-forma gets it up to 368. But the current being 266. Oh, look at that. Come on. You're going to tell me that you're going to fill up 30% of your property and your total expenses are only going to go up $6,000 a year? Come on. That's wild. That is wild. Okay. I mean, come on. This is, I just always find it comical digging into offering memorandums because you're like, all right, how else are they going to lie to me today? I mean, that's a big jump from $15 a foot to 20. Let's see what this other property's getting. Are they getting? I mean, it says what they say their NOI was. 362,000 was the NOI. Divided by 25,626. They're getting $14 a foot. Ooh. $14 a foot net. Now, I don't know that we're going to be able to push it up to 20, guys. I have faith in our abilities as investors, but I don't have that much faith. This is a nicer looking shopping center getting $14 a foot net. To me, I don't see how it works out. Yeah, Watch Me Grow saying cheeky brokers, the cheekiest with creative accounting. Yeah. Christian's saying, I think that the cap rate will be much higher when you exit because there's too many small tenants. I agree. I think the cap rate's going to be much higher when you buy it too. Unless this was generating great cash flow, then maybe it would be a good investment for longer-term investment cash flow, like 5 to 7 year hold. Yeah, I mean, it's tough, man. To me, I'm looking at this and I'm like, I don't know. I don't see how what we're about to underwrite is possibly going to work. But let's see what we got. This is Christian's deal. And we're in Woodland, CA. All right, so we're talking, I want to be precise here, 30,767 square feet. Oh, let me zoom in on this so you guys can see it better. $30,767. Purchase price. Let's. I'm not even going to bother underwriting this at the ask, which is typically what I do. I'm going to go in at what Christian had said he would offer, which is 3.2. Capitalized rehab. I mean, come on. The building's tired. You need to at least paint it. You need to have some money there for TI. I don't think that it would be unreasonable to say that you probably should bring at least $20 a foot. So $600,000 for a rehab. All right. I mean, again, paint, seal and stripe the parking lot. I mean, that may be too high. And if that's too high, fine. But it just looks old and tired to me. And I have no idea what the condition of the roof is. We're going to assume the roof is fine. It didn't look terrible on Google. But who knows? Closing costs, we got to get these up to 70 grand. We got to get that closer to 2%. Operating capital, we'll leave it there. Total for closing, $1,244,000. Down payment, we'll keep it 25%. Interest rate, I think the bank's going to look at this and be like, no, you're at least paying 7%. Okay, operating income. I'm going to assume that we're able to get $14 a foot net, like our comp property. All right, I'm not going to assume any more than that. So coming over here, we're not going to get 14% net on all of the property. Year one, we said it was what? It was 28.5%, so 71.5% occupied. Let's just say year one, we're just painting it. We're just getting ready to really start leasing it out. Nobody wants to sign a lease until then. And then let's say year two, we get it fully leased. All right, we get this totally up and operating, but it takes us a few months to do it. I said that our max would be 13% vacancy. So let's just say we've got 18% vacancy there, and then we've got to level this out at 13%. I don't think that we're going to be able to fill this property entirely, and I also don't think that the 6% of the property for the apartments is going to be worth anything. All right? We'll see. Maybe I could be wrong. All right, pro-forma operating expenses. We're assuming triple net leases here. We don't actually know. I don't think they said in this offer memorandum whether these are full service. Oh, they're all gross. All of them are gross. Yeah, that makes sense. They're 1,000 square feet. Okay, well. All right, well, we got to change that up. We got to go all in on this being a gross lease. So we're saying we are collecting $468,000 a year with an average rent of $15.15 gross. Is that what that is? Oh, that's bad. Okay, maybe there's some room to move it up then. All right, so we're going to say $15.15 gross. And then let's see what my operating expenses are. They're saying 201, so $6.54 a foot. I mean, that seems low for California. I feel like the taxes don't seem all that crazy. Oh, look at that. They're saying the taxes are going to stay the same when we buy it. That's nice of them. Are they going to go down to the court and argue that for us? Unless we're buying it for the same price, I can promise you that's changing. Okay, well, let's use their numbers first. So $6.54 a foot. Oh, sorry, guys. Okay, I'm going to keep that at 103%. I'm going to assume, though, since these are smaller units and we're so severely underpriced that we're actually able to raise our rent by 5% per year. Going to have to pay 6% commissions. We're just not getting around that. Oh, we never hit a debt service coverage ratio. That's bad. We get to 1 for 1, though. All right, I'm going to keep it at 12 months interest only just because I think that you could argue, hey, with the value add we've got to do here, you get 12 months interest only. Asset management fee. Let's just say that you're actually not going to syndicate this. Maybe you're going to invest in this on your own. I would keep the capital reserves at 35 cents a square foot. I think you're going to need that money just in case. Christian is saying, get down that rehab number. Let's take a look and see what it's going to look like. All right, no reallocation because we're not syndicating this one. We're just going to say, hey, we're going to do it on our own. And we lose money every year. That's not really an investment that I would like to do. Not really here to lose money. I'm definitely not exiting at a 7.5. I think that we're going to exit at an 8. And I lose 75% on my money. It's tough. Not going to be a good one. I mean, I don't know about you guys. I don't wake up hoping I lose 75% of my money on a deal. It's too much work, man. Too much work to lose that much money. All right, even if we drop this to 0, let's just say we don't even rehab it at all, and we just think that we'll be able to keep our rents growing at 5% per year and get everything else leased up, it still loses money. It still loses 12.73%. Trading for Science is saying we only lose money in crypto. That's right. Dude, I sold out of all of my crypto. I can't do it. I can't do it. I know what I'm doing in commercial real estate. I have no clue in crypto. I was like, you know what? I'm just going to sell this and put it back into real estate. Focus on what I know. Let's see. Trading is saying I'm going to watch your course and YouTube channels like I'm watching Netflix tonight. Get it. Happy to help, man. Yeah, actually, I've been watching a lot of YouTube on TV, like on a TV instead of just on my computer. It's pretty great. I'm the clean version of Ben Mala. I will take that. Yeah, he's got a lot of drama, man. He's got a lot of drama. Okay, so with that being said, if we dig into this a little bit more, let's figure out what this building is actually worth. I mean, my pro forma doesn't match remotely what they're saying it is. They had their NOI at $266,000. I know that I don't know how. I don't even know how that's possible. Oh, you know what I did? I am. See, this is what I always do. You got to go back and you got to look for anomalies. So this $15.15 a square foot is calculating off of the total square footage, whereas their $15.15 a square foot is calculating, I believe, off of the current, which is including all of the vacancy. But let me double check that. Okay, well God, come on. They have potential gross revenue, and then they have no general vacancy. So they're saying their potential gross revenue and their effective gross revenue are the same. Oh, I don't like looking at numbers like this. This is not right. Man, I don't think that it's $15. I think it's $15.15 for the 71.5% that's occupied. So let me run the math on that real quick. That would put us at $21.19 a square foot on average. Now, if I look at the rents that we're getting on a per square foot basis here, That seems reasonable. So that's what they did, is they just said that's based on, that is including vacancy. So that's what I need to change in my spreadsheet. I need to make this $21.19. All right, there we go. So now our gross potential rent is $466,000 because we're losing $185,000. Okay. Now let's look at the pro forma. If we leave it as is, whoa, it doesn't look bad. But I also don't think that we're going to be increasing our rents by 5% a year. Let's say it's 3%. I also think that as soon as we buy it, we're going to have a massive jump in our taxes. So I'm going to say this is actually 105%. What else do we have? We're definitely going to have to bring some capitalized rehab. There's no way around that. $124 a foot. Okay. 25% down, 7% interest, 20-year amortization. Okay. If that is the case, all right, that's an investable deal. If all of this is true, Christian, you're right. $3.2 million is probably the price. That's assuming $600,000 in rehab. I made some general assumptions about that because I don't know the condition of the mechanical, the electrical, the plumbing. I don't know what's going on with the roof. That's all stuff that I would have to have inspected. But $20 a square foot is always a good round number for me to put in if I look at something and it doesn't need anything immediately apparent. All right. I don't have the rents growing aggressively compared to everything else. I mean, we are netting. How much are we netting per square foot every year? So let's say 221,000 divided by 30,767. We're netting $7.18 a square foot. I mean, I guess that sounds right because of the vacancy there. Expenses are within an expected range. We hit our debt service coverage ratio in year 3. Yeah, I mean, I would say that this starts to look interesting at that point. Like if you were able to get it down to $3.2 million and you're actually able to investigate it and make sure that these numbers are right, because that rent roll, I have some questions about the rent roll. I've got some questions about what these leases are going to look like with that many tenants. It's going to have to, like, honestly, Christian, at a minimum, this is what I would want to see out of it, right? That I'm going to be able to double my money in 5 years, because the amount of work that's going to have to go into first on the front end, just with all of the leases, and you're going to have a ton of leases to dig into, which means a ton of legal work, and that's going to be expensive. Sorry, I'm not even showing you guys this. So 104% annualized return, 104% total return over 5 years ends up being about a 20% total return annualized, right? And about a 16.85% IRR. So that's not a bad deal if that's the case. And again, we're exiting at an 8% cap rate. I'm assuming 7% expenses on the sale. If this is the case, I don't think it's bad. Now, let's say that we're going to syndicate this. How is it going to look now? So I'm giving myself a 2% asset management fee, 20% reallocation fee, which means 20% share of the GP. Now it's not starting to look so good, right? Investors are going to want to see more than that. So that's when it gets tough. So Christian, what I would say, man, if you're looking at doing this by yourself, let's say you got a 1031 exchange or something like that, this is a property worth digging into, doing more due diligence on, and actually putting together your underwriting. If it's just something that you're looking to raise capital on, may not necessarily be a deal unless you get it down probably below 3. All right. So there you have it, guys. That's my analysis for today's 30 deals in 30 days. Hope you guys have enjoyed it. If you are liking these, let me know in the comments. This is a lot of fun. I've never done a challenge like this before, but hopefully by the end of this 30 days, you guys will have a phenomenal understanding of how to go out and do a first blush at doing this underwriting. Appreciate you guys. As always, time for me to get back to the mastermind. Hope you guys enjoy the rest of your weekend. Hopefully I'll see you tomorrow. This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more.